Good morning. Welcome to Stock Market Today. It's Tuesday, August 13th, 2019. I am your host, Dan Russo, Chief Market Strategist at Shaken Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Shaken Analytics. Head over to shakenanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities were lower in Monday's trading, continuing now a two-week stretch of a lot of downside volatility on Mondays. Though they did finish off the worst levels of the day. All sectors finished lower, led by financials. You're seeing the impact of falling rates. Treasuries rallied, and the curve flattened. The dollar was weaker versus the yen and the euro. Gold finished up 60 basis points, and WTI crude settled up 80 basis points. So as earnings season winds down, investor attention is really going to start to focus squarely on the macro. U.S.-China trade will continue to grab most of the attention. Some new developments in Argentina yesterday, as there were surprise results from a primary election, led to the index, the equity index in Argentina, trading down by 38% yesterday. Finally, global yields will continue to be a factor in asset allocation decisions as far as I'm concerned. As we get to the desk this morning, futures are down 10 basis points. Asian markets were weak overnight. Hong Kong down over 2%. Japan off more than 1% as they came back from holiday. European markets are also on the defensive. Treasuries are unchanged to slightly stronger. Dollar down on the yen, but a bit better on the euro. Gold is up 1.4%, and WTI crude is off 10 basis points. So let's take a look at it. We are testing the near-term support zone, 2850 to 2900, after fading from the 200-day moving average. Resistance in the area between 2950 and 3000 from a stronger standpoint. 2900 could be some near-term resistance here on a shorter-term basis, where obviously we're watching the character of RSI for clues. So far, it points to us not exactly snapping higher from here. I'm open to the idea of a trading range. I'm open to the idea of us kind of bouncing back and forth between the moving average, call it 2793, that's the 200-day, and the 50-day up here at 2939, and the key support and resistance levels in between. I am open to that idea. Apologies for that. Chicken money flow remains bullish, but the fact that the RSI failed at 50 and is now moving lower bothers me a bit. So once again, we have our line in the sand here, 2850. This is the level to watch, right? Really slightly below the lows from Monday. If we can hold above last Monday's lows, we'll probably continue to chop around. If we break those lows with the RSI below 50, probably makes sense to start to get bearish. But too early to say for now. I'm open to the idea of a trading range. Global tensions weigh on stocks to start the week. We touched on that already. All sectors finished lower, but bond proxies outperform. Falling global yields impact asset allocations decisions. Precious metals drive materials to outperformance. And futures do point to a lower open here today. And I apologize, I have a small typo here. This should say, but bonds proxies outperform. So a quick change on the fly as we get going. Easy enough. Power bars are now negative across the board. Small caps were the last holdout. Big move lower yesterday. Power bars are negative across the board. 9 to 4 for the Dow. 111 to 76 for the S&P 500. NASDAQ 2418 bears to bulls, and 387 to 379 bears to bulls for the small caps. Bonds, big rip higher, sending yields lower, and this is a global phenomenon. Look across the board. In Germany, yields from 1 year to 30 years are negative. Japan, same thing except for the 30-year. France, same thing except for the 30-year. Global bond yields are heading lower. Here in the U.S., 10 years still at about 1.65, 1.7%. To me, there's scope for lower yields. I think you want to start to think about looking at REITs and utilities. Right now, they're overbought within Shaken Analytics, but they're beginning to outperform. So when they set up a little bit more tactically, there's likely going to be opportunity there. Stock of the day is Owens Corning. OC is the ticker symbol. Closed at 53.50, down 1.07% yesterday. Has a very bullish rating due to very strong earnings performance, attractive financial metrics, and positive expert activity. Stock does have weak price volume activity, as you can see here. It's making the turn. trying to make the turn. Right? I've dropped down the checklist for you to look at, and you can see it's a strong stock, right? Power gauge is bullish, outperforming the market in a strong industry. The strength is there. But the timing, right? The tactical, the strategic plus the tactical is what equals the opportunity, right? Very bullish stock, strong trend, strong industry group, outperforming the market, market and model and agreement, dynamic duo and gear. However, money flow is wavering here a bit. We are oversold, but we prefer to see oversold and moving higher. So I think Owens looks interesting. I think if you're aggressive, if you're itching to buy something today, it kind of looks interesting. I don't think you need to do that given the market environment. I have Owens. I already added it to a bullish watch list. I'm going to continue to watch it for opportunities to get involved on the long side and to write it up as a bullish stock of the day. But for now, I'm just watching because the timing is not there. Taking a look at the sector tracker now, moving to the major sectors over the last 5 days. Defense at the top, real estate and Utes outperforming. Tech, as last Monday dropped off, tech rallies. Staples, healthcare, more defensive. Discretionary, comms, materials, and industrials, also bullish. Financials and energy, underperforming over the last 5 days. Remember, last Monday was a 3% drop for the S&P 500. So as that negative day dropped off, and yesterday was not as severe, that's why this looks more bullish than yesterday felt. Energy continues to be a group we want to avoid. Utter atrocity. Farm services is also a group that we have been bearish on, and for good reason. It's been underperforming the S&P 500 over the past 6 months by 15%. Power bar ratio, which measures future potential, is weak. 12 bears, 10 bulls, currently ranked number 13 of 21 subsectors. Some of the indicative names there that you want to avoid: Therapeutics MD, TXMD, Wave Life Sciences, WVE, and ARI, AERI, all have very bearish Chaikin power gauge ratings. Let's dive into the ETF and see. Now, it's interesting to me that the power gauge rating, the ETF rating, went neutral, has turned neutral. But remember, it's rating in conjunction with relative strength. A lot of people ask me, hey, Dan, I own this stock. It has a bullish rating, but it's gone down. Okay. When I pull up the chart, you can see that it's been a steady underperformer. It's the rating and relative strength. The dynamic duo. Market and model have to be in agreement. And they're not here for pharma. Neutral rating, underperforming the market, still persistently bearish money flow, clear downtrend below the falling long-term trend line, right? Weak trend. It's an area of the market you don't really want to be involved right now, right? There might be one-off situations, right? You're going to point me to Amgen yesterday. Okay, they won a court case. Overall, group doesn't act well. Pharma names continue to be an avoid as far as I'm concerned. Looking at yesterday's, the S&P 500 movers and shakers, our gainers and losers. Speaking of Amgen, as I said, they won a court case against Sandoz. Stock up 5.86%. CenturyLink, didn't see any real news there. Bullish stock, up 3.9%, bucking a very weak tape. Cisco, SYY, up 3% ahead of their earnings. Trading lower here in the pre-market this morning, though. News A trades in Australia, and it caught an upgrade from an analyst over there. Sent that stock higher by 2.41%. And McKesson up 1.78%. No real news to drive trading activity there. On the loser side of the board, last week, Nectar, NKTR, provided a manufacturing update on the manufacture of one of their drugs, and market didn't like it, down 11%. Mosaic, no real news to send that stock lower by 8%. CTVA, didn't see any real news there. The stock lower by 6.5%. Semantic, obviously now a special situation with Broadcom buying their enterprise business. There'll be a lot of moving parts. The ARBs will be involved there. Kind of tough to analyze at this point unless you have a read on the special situation. And some follow through downside to DXC, down 5.5%. Remember, they came out last week and lowered their guidance. Stock is trading weekly. Taking a look at earnings surprises now. A little bit of an update. Let's get up to speed on what's happening. There's that Cisco. They beat by 3 cents. Stock is trading lower here in the pre-market. Reporting today, CDK after the close is a neutral re-rated stock. AAP, Advanced Auto Parts, is trading lower here this morning following their earnings report. And you can see the earnings calendar is starting to dwindle. dying down here as we get deeper into August very shortly. Everybody's going to be on vacation. So earnings season drying up. And again, it gets to my point from earlier, the focus is going to turn clearly to the macro. Speaking of, one of the areas of the market that we've been warming to, you've heard me say we're warming to it, and I just wanted to kind of highlight it now, is materials. Here we're looking at the XLB, the Materials Select Sector SPDR ETF. And you can see it's above the 200-day moving average, which is beginning to round higher, right? Bit of a trading range over the past year, but definitely an upside bias to this trading range. Now, we've pulled back, tested support, tried to rally. We're pulling back here with market weakness. But notice that RSI can't get oversold. Right? The sell-off in May, RSI held, did not become oversold. Initial sell-off last week, RSI held. And it's still holding. I think that materials is an area where you want to look. Now, you have to be selective, right? It's not a broad-based theme, right? It's really being driven by precious metals. Gold and silver stocks have been on fire. But again, there's opportunity. And as I look on a relative basis at the bottom of the chart, I can see a series of higher lows for XLB relative to SPY. So this is just an area of the market where I want to start to do some work. I want to start to focus. I want to look for the best opportunities. I want to look for the leading stocks in a leading industry group or a leading sector. Take a look at precious metals, in particular names around gold and silver. For those of you who subscribe to my market survival guide, you'll know that I've been bullish on gold, highlighting funds to take advantage of that theme and individual stock ideas to tactically take advantage of that theme. And I remain of that view. Market survival guide published every Tuesday. Kind of looks across asset classes. So it's not just focused on stocks. We're looking at rates. We're looking at commodities. We're looking at currencies. We're looking at global markets, finding the best opportunities. See some opportunities in tech still. XLK coming under a little bit of pressure on a relative basis. Here's XLK relative to the SPY. Breakout, pull back, but holding, stabilizing above this rising trend line, above the 200-day moving average. Encouraging that the RSI has held in bullish ranges during this pullback. Tells me that we're likely to resolve to the upside after consolidation. On an absolute basis, tech is still in an uptrend, right? So probably one of the most sensitive areas of the market to the trade war, but it's holding up. That's information that tells you something. Right, continues to hold up. Does it have to continue to hold up? Absolutely not. Which is why when you're looking for opportunities, as always, in tech and in every sector, you manage your risk. I tell our Chaikin clients on our Monday calls, you should, when you're buying a stock, you should know where you're getting out before you're getting in. Right, so playing off tech still being strong, let's look at an interesting name, EPAM. Software and services name, you know I've been bullish on that group. EPAM has a very bullish Chaikin power gauge rating, and it's been outperforming the market since January. Market and model are in agreement. Dynamic duo in gear. If I drop down the checklist, all of the boxes would be green because look, this is what we're talking about. Oversold and moving higher with bullish money flow as it holds the trend line after gapping higher on a positive earnings surprise. Take a look at a name like EPAM on the long side of the portfolio, right? Take a look through the software and services space because there are opportunities in names that are now oversold, but still outperforming the market, right? So they're oversold within the context of an uptrend, and you'll find some opportunities there. So in my note today, I'm highlighting EPAM, but as always, I'm aware of the market environment. So the level that says I'm wrong is $172, and I derived that level using the average true range method to set a stop, subtracting 3 times the average true range from this current price gets me a price at $172, so just around these lows. If the stock were to go through that level to the downside, then I am wrong in my view on EPAM, and I'll gladly get out and look for other opportunities. But EPAM looks compelling to me here on the long side of the portfolio. It's my stock of the day in Chaikin Analytics, but always manage risk. So that's going to wrap it up for today. Head over to ChaikinAnalytics.com/today. Sign up for the email. I'll be back here tomorrow. Have a great day, everyone.